The whole world is watching as stocks fall further and further. In disbelief, some traders have decided to add more shares to their portfolios. Whether this was a wise move or not remains to be seen in 2018. We are now in a negative state for not just a few stocks, but soon the majority of stocks will be in correction mode. With rising interest rates and mounting geopolitical issues, what will turn this around? You came here for the truth, so let me unveil that for you. Today we're going to talk about the stock market, what has happened. I'll show you all the charts. I'm going to show you everything interconnected with it. Let's begin by taking a look at this article out of CNBC. Dow erases gains for the year, tumbles more than 600 points as stocks extend the October swoon. This information is, as I recorded, brand new after the market closed. I wanted to bring you a video. I've been covering this as it's been happening, and clearly you can see the weakness that has mounted over and over again. You're looking at the Dow Jones at the top, the S&P 500, and then the Nasdaq down respectively 2.43% and 4.5% for the day. You can see the charts here. They are all down significantly. Right now, the Dow Jones is at about 24,500, and that isn't good because now we've moved down below the 26, below the 25, and if it continues in a couple days, perhaps even one day, if we have another big drop like today, it could go under 24,000. So something's going to have to turn it around. We're going to need to see more earnings that are putting this into positive territory. The FANG stocks and things aren't keeping this market going now, and that's not good. One of the tech stocks that many have been talking about here is plummeting after missing on revenue, giving weak fourth quarter guidance. All right, so that shows us a weakness 20%. 20%. I mean, that is a significant fall for such a big company. AMD, if you don't know who AMD is, their competitors Intel, so you've probably heard of them before. But you have to understand, a big company like this, when that looks weak, then other companies around, there's more scrutiny on it, and then it usually pulls them down with it. All right, so looking at the next one, stock rout erases 2018 gains for the S&P Dow indexes markets wrap. What you're looking at is a significant fall that's taking place not just in one market, not just in one sector, but it is spread throughout the entire US market, and that has affected what has been happening around the world. Europe is feeling it, Asia is feeling it, we're seeing it in China obviously very clearly now. And this has been a problem that has taken a very long time to hit the US markets, but right now it is present. Many people had expected this to happen in October. I remain silent about that, but here we can see very clearly that it is right here and now. Media and tech stocks get whacked on a rough day for Wall Street. So these are the biggest heavy hitters in this case here, and not on the positive side, that's for sure. There's only one sector in the stock market doing well right now. S&P 500 Consumer Staples Index is up 2.6% this month, on pace for the fifth straight month of gains. As I said, you have a readjustment of portfolios that is taking place right now. It's not taking place for the retail investors, but it is happening at the institutional level. And I am so interested to see what the central banks have done in the previous quarter. I'm going to bring that information to you as soon as we can, as soon as that data comes out. The last ones that we have are from the end of June. So as soon as the new information is provided, I will definitely bring it to you to see how they are behaving, at least as of the last filing of the 13Fs. Lower. Nasdaq Composite Index falls into correction territory. This is what I've been warning about, that it could happen very easily. This happens to be the Nasdaq, over a 10% fall from its peak that was experienced. All along, we've had so much weakness. We've had the emerging markets. We've had other markets around the world, in fact, that have been suffering. And the US market, particularly the Nasdaq, has been doing very well. But now we have over a 10% fall, and everybody needs to pay attention. This is something that I believe everybody needs to know. Average daily SPX return if previous week return was negative. And if you look closely at what they're suggesting, buying the dip worked from 2006 up until this year. But in 2018, that doesn't work anymore. 2018 has been a very bad time to do the whole buy the dip mentality. This is from Morgan Stanley, but you can see statistically this hasn't worked. So we'll see how the remainder of 2018 goes, but as of now, we're heading into late October as of this recording, and it's not looking good. There's not much time left. S&P information technology sector, we're going back into levels we haven't seen since May. And that's pretty significant because you're looking at those that have done so well in comparison to the rest of the world. Many stock markets today are in a bear market. I'll talk more about that in a second. It's not just, one or two stocks or a few big names. We're looking at a large percentage now, either in correction territory or in a bear market. FANG stocks are down to levels not seen since May, and that shows us that we can see renewed weakness. What's happening? Okay, we've got interest rates are a problem, geopolitical tensions, the trade issues going on between China and the US. We can see the concern for oil prices rising. I mean, that's always there, but it goes on and on and on, and we should be seeing massive volatility. That would be normal, based on what we're seeing in the media all the time, but it's been shrugging it off, and there's been this whole buy the dip mentality, but the market is no longer seeing that as a way out. We can finally see the weakness actually appearing in the tech-heavy sectors, tech-heavy markets like the Nasdaq, even the S&P 500, and it extends out further into the Dow Jones. We can see that spreading. The Russell's got a problem. Looking out further and further, we've got issues today, and it's showing up on the technical indicators. This happens to be the Nasdaq, and you could see how it fell way below its 200-day moving average. At this point, I've been showing you as this rout has gone on, and this really needs to be pushed up another 1,000 points, basically, to get back to where we were. We're almost down 1,000 points, I believe, if memory serves correctly. So that's not good. That's showing us true weakness present. It's not just one day of losses, 2 days of losses. No, not even close. S&P 500 sectors descent from 52-week highs. Depending on where you want to look, it just goes from bad to worse. Infotech and consumer staples right here. So this is infotech. This is consumer staples. These are down about 8%. Looking at consumer discretionary, which, it's Amazon and others, that's down about 10%. And look at the financials, down 14%. All right, that's S&P 500. We're looking at a level that is approaching 20%. That would put them in a bear market. If I look at global banks, they're in a bear market. If I look at global systemically important banks, the bigger banks, the too big to fail banks, they are in a bear market. It's crazy to see how bad these very important stocks are doing all throughout 2018. We are, as I said, in the very end of 2018, and it's not looking any better than it did a few months ago. In fact, it's getting worse. And right here, a pie chart, S&P 500 stocks slump from their 52-week highs. Almost 40% of the index's components have fallen into a bear market. 40%. Think about that. We're talking about serious losses today, and this is present in FANG stocks. We're seeing in the S&P, the Nasdaq, the Dow Jones, and all markets around the world. It's not just the S&P 500. And then this. Looking back in the predictions, it looks like this was a bunch of these analysts, all right, from their 12-month target on November 30th, 2007. So they asked them, what are your predictions? What's the S&P going to be at? What's the Fed funds rate going to be at? What are your favorite sectors? What do you want to avoid? And so on. All right. Remember, this is end of 2007. And they're trying to say, what's it going to be fourth quarter 2008? The majority of them, overwhelmingly, said that the growth would be positive and that everything's going to be just fine. Only this one here said minus 5% growth, and one here suggested minus 7.3%. Everybody else put significant growth here. Everybody else. And what happened? We know what happened. 2008 was not positive, and the early part of 2009 was even worse. Just look at what happens. You take all these analysts' advice, and then you get stuck in a very bad situation. But all throughout 2005, 2006, into 2007, these guys were probably looked at like geniuses. Oh, everything is just fine. Invest in that, invest in that, invest in that. And they were making money, supposedly. And then suddenly, everything changed. Be careful who you take advice from. Manage your own finances. Do your own due diligence. And make sure it's you yourself that's advising your decisions. Don't listen to anybody else. Take the data itself and make wise choices. If you found the video informative, please give me a thumbs up. And give me a thumbs up, it helps support the channel. So I do appreciate that very much. Just hit that button. You'd be supporting me. And if you want the financial education that was not taught to you in school, that was kept from you, well then, these two books have it all. You can actually flip through these books at Amazon. There's a link in the description below. I get into everything, the foundation, the history, the asset classes. I get into all of that data, and I've done so by simply making it very, very easy. I got rid of all the jargon. And, if you just want to check it out for yourself, look at the link in the description. If you want the audiobook, that's at themoneygps.com.